Oh yeah, really in the game. I done figured out how to record this stuff too. So what's going on, Stick Talk familia, Stick Talk Dunny family? So if you're just rolling into the live this morning, this beautiful Wednesday, man, make sure you hit the follow button. You know what I'm saying? Let me know what ticker you're watching today. Drop some notes in the comments and stuff. We don't chase no stocks over here, but we let the market come to us. And today could be one of the biggest days that we had in a long time in the stock market. So, all right, a couple things. Today, really, the market is trading around two things. We got the Federal Reserve interest rates happening today, and that decision comes at 1:30 Eastern. 1:30 Central Standard Time. So that's going to be a big deal in the market, right? Are we going to be cutting rates? Are we holding rates steady? Or are we going to raise interest rates? Personally, I don't think we're going to raise interest rates. I think that'll be the wrong thing to do because the market data has been mixed. You know what I'm saying? Jobs revision is down, but also unemployment, people, filing for unemployment is lower also. We have some earnings being strong. We have GDP coming in lower than it should be. So it's really mixed. If anything, I'll probably say we'll probably hold rates steady. So we'll see what happens though. But that's really what the market is waiting on. That piece, and then big tech earnings, right? We talked about some of these yesterday. We got some really big names. Let's go here to the earnings calendar here. And today, we got SoFi today, this morning. But, man, Robinhood, Meta, Microsoft today, right? All big. QCOM's also big. ARM's also big, right? They're all chip companies. Those are chip companies. So those ARM, QCOM, chip companies. Lam Research is a big deal, right? And then tomorrow, remember, we still got Apple and Amazon. So 1, 2, 3, 4 of the Mag 7 are reporting earnings in the next 2 days. So today we're really going to be focused on, okay, how does this morning go? SoFi. So we'll look at SoFi's earnings and see how they did too. Let's do a breakdown of what those look like. I keep saying earnings, and I'm going to show you what that means and what you look for in earnings and what's good and what's not, right? So we got the big tech. So that means, you definitely want to expect some volatility today, especially when the rate decision comes out and they start talking about that type of stuff. Anytime or they start talking from the Fed, we start seeing some volatility in the market. All right. So we should expect some of that. All the earnings report with Apple, Amazon, and then we're also watching whether the leaders continue to broaden beyond just the Magnificent Seven, right? We had these seven stocks really kind of hoisted things up for quite a while. And, are there going to be other stocks that are going to step up? You know what I'm saying? We don't know yet. So, what I'm watching today, here's the three things that are on my calendar for the most part. SPY, I always start with SPY. It's the S&P 500. It drives the market. So I always start my day with SPY and charting out SPY. So let me move you guys down here a little bit so you can see the screen better. Hold on, I don't want to lose you though. Nope. I think I lost you. No, Ricky. Yeah, I think I lost y'all. All right, whatever. So SPY. We want to start with SPY. See, we're still in this little downtrend. I've been talking about this. We're still in this little downtrend on SPY. So we got to break through this for SPY to really go crazy, and we haven't done that yet. But we did have a good day yesterday on SPY. We came all the way down to the weekly low and the daily low from Monday, and bounced right off of that from 735.62 and ran this thing to 742.08, and then overnight in pre-market we hit a high of 743.54, right? So we're talking about a 9-point move. That's a nice little move, and we caught some of that. We caught a couple of those plays for like 125% on those. So that's cool with SPY. Now, here's one thing I want to show you for my traders. Again, we're waiting on SPY to break out of this. So you see these things happening here? Boom. Look at this. This here, flag, and then, this is a flag pole, and then this is a flag. That's called a bullish flag. This is inside the 1 hour. You see, that's a bullish flag spot on SPY. What the heck are you talking about, bro? All right, bullish, flag pattern. All right. You see that? This is what we're seeing on SPY. That there. And then look at this. You see that? Boom, boom, and then it broke out. But look here. There's another one kind of forming here. Right here. See that? Another one of these little things kind of forming right there. Going like this, then going like this. And then look what that strong uptrend happens and it breaks out. So this one formed, boom, boom, and then it went from 739 to 743. So a 4-point, almost a 5-point move. So if this flag does play out and we break out of this thing, we're talking about going from 742 past this up to like 746 if we get another 4-point move. Okay. So that's what I'm looking at for SPY. Right, I want to see what happens here with SPY. Do we break out of this and this becomes our bull flag and gets us to 746? Okay, that's how I'm charting out SPY. I got to figure out how do I get you guys back up here? How do I get my people back up here? Is that it? No, that ain't it. I don't know. I got to find you. All right, I got to find you. Anyway, I'll get you back up here eventually. So that's what we're waiting for. Is that going to be a breakout on SPY or not? Right? Do we bounce out of there and push it up? Maybe, maybe not. All right. So QQQs is my second one, right? This is the tech sector. But again, man, tech ain't been doing too good. Tech ain't been doing too good. Things been kind of rotating out. But look here, see this downtrend we've been tracking? We kind of broke out of it. We got out of here and we popped up to 680. So we got a break out of there, but then we came back below our little zone here. So let me go back to SPY real quick. Sorry, I want to give my levels to my group because I'm recording this for my group also. So I want to give my levels here on SPY. So if we're looking at the daily, the high of yesterday, we're going to move this up to the high of yesterday, which was 743.05. And then we're already got the low of yesterday because that's where it dropped down to and bounced off of. So let's go to the 1 hour. And then I want to look at my pre-market here. Boom, boom, boom. We're in pre-market right in this thing right here, right? So very, very tight zone for the pre-market and for the high of yesterday. So I'm gonna bring this down here and this is gonna be my zone. I'm not doing anything until we either lose this 741.54 to pull back down to try to retest this, or we break above this level here. And the beautiful thing about this is we got three things called confluence, which means three things that are lining up saying the same thing, right? We're all in agreement with each other. We got a bull flag, we got the touch of the pre-market bottom, actually four things. And then we have the top of this that could be a resistance that we're breaking out of, and we have the downtrend that we keep breaking up. So we got four things lining up that's saying if we bounce here, we are all in agreement that we're probably going to break out of this and run for a little bit, at least up to the 735. Four areas of confluence telling us the same thing. All right, that's what that means. Then we go to the Qs, and we're going to do the same exercise. That's all I do. Boring. We're going to go to the bottom of yesterday, which came all the way down to 668, and we're going to go to the top of yesterday, which was 670. I don't know. We'll drop down to the 1 hour and see what that was. 679-ish? Yeah, 679.95. So this is the zone right here, right? This is our trading zone. Now our pre-market is here. Let's see here. Horizontal. Our pre-market's right here. All right. So we got 679.95 and 676 as our levels. And all we want to do is wait. That's it. Just wait. This is the part of the game that gets a lot of people in trouble because they don't like to wait, right? They don't like to wait. So we want to wait. We want to wait for us to either break above this 679.75 and take it up higher because it'll also be breaking out of our falling way. I mean, our downtrend here. Or we want to wait for it to break below 675.60 and then take the puts down back towards this demand zone. Now, these are some good trades, but I'll also tell you the best trades you're ever going to get are trades that bounce off of a supply zone or a demand zone. Look at this. You take a trade off of the supply zone right here. Your stop loss is up here, never triggers, and all you do is just stay in the play. As long as your stop loss isn't triggered, you stay in the play, and then you just move your stop loss to follow behind you as your money's going up. These are going to be your most strong plays here. Same with this. Like, even if you got in here, your stop loss is here. It never triggered, even though it did this and came back down. It still hasn't triggered. So you can stay in this play and just stay in this play and stay in this play, and then just start moving your stop loss behind you as the stock is going up. So as your money, move your stop loss. All right. So that's going to be where you make the most money, is bouncing off of those zones. All right. Third thing, most important. This guy here, we talked about it yesterday, the volatility index. This guy's tricky. tricky. And as long as it's above 17, you can't trust anything. If you're going to do any type of calls, you got to be in those things, scalping them out, getting your profits, or you have to push these plays out a couple of weeks, maybe to a month or so, as the market decides what it's going to do. I expect this thing to do some spiking today because of the Fed decision, right? I expect this thing to do some spiking as the market starts to digest what the heck the Fed decision means. So this is going to be a very tricky day today, all right? So that's the third one, is the VIX. And as long as it's up here, all the bounces are more than likely going to be fake outs. But once we start falling here, bounces are going to go crazy. And once we spike here, the market will pull back fast, all right? So got to be careful with that. If you don't know about the VIX, get familiar. All right, so SPY, QQQ. Let's go look at the mags, see if there's anything worth trading in the mags. So Apple has earnings tomorrow. I think I said tomorrow. They've been going crazy. Look at this. Apple been going crazy. Remember I said a lot of times when companies have amazing run-ups before earnings, you want to be careful because they may pull back and vice versa. So we're going to do this. We're going to draw a trend line up under here for Apple. See that little trend line? And as long as Apple stays bouncing along this trend line, we're going to say, okay, this is a bullish play. But we want to play the trend lines and the pullback. So if Apple pulls back down to this trend line or to this blue line and then bounces again, this is where we want to enter. We want to trade the pullbacks because we're in an uptrend. So we're going to wait on Apple just because of where it is right now. We gotta wait on Apple because of where it is right now. So pre-market started here. So pre-market high is up here. Pre-market low is basically this channel. So above 341.70, we'll take more calls, or if we come back down to this trend line around 339.30 or 340 and bounce, we'll take calls up to this as a take profit one. All right, and then once we lose this, we'll start taking our put. So that's what we see on Apple. Let's go to the chip leader, NVIDIA. Okay, NVIDIA, again, hasn't been doing well. The China news that we talked about yesterday, China news got NVIDIA and the chip manufacturing market shook. All right? Now, this is what I see on NVIDIA. Remember we did that thing that showed you the bull flag? Look at this. Same thing. Here's a flagpole, right? There's our flag waving. Boom. All right? So if we do the opposite of this and say bear flag. See that? See this? Boom. See this? This is what we're showing here on NVIDIA. Look at that. Zigzag, zigzag, zigzag. So this tells me that more than likely NVIDIA is probably going to pull down a little more. If this flag plays out, it's going to break out of this and pull down a little more, maybe back down to 191. All right, so this is what this is saying on NVIDIA right now. That's what I'm looking at, is more bearish than bullish on NVIDIA. Now, these don't always play out. This is just my first inclination because of the pattern that I see, is that I'm thinking we lose this 196.45 and we pull back down, and once we lose this 195, it's really bloody murder. All right, so this is what I'm gonna wait for. 196.45 for puts. And then if we do reverse and break above this 198, take these calls. But remember on the call yesterday, I said NVIDIA had some room to run back up to around 200. We didn't quite get to 200, but we got to, what's the top of this thing? 198.70. Very close. We got very close to 200. It doesn't matter, though, because if you were in a call, a $200 call, it doesn't have to hit $200. It just has to go in your direction. So coming from here, 192, running up to 198, you were well in the money on NVIDIA. Once it hits, probably once it hit like 194, you were getting in the money on a $200 call. You know what I'm saying? So that's the beauty of it. The strike price doesn't mean it has to hit that for you to make money at all. That's only, it has to be above that strike price or added when the call when the contract expires. But we don't hold contracts to expire. We just get into them. Once the premium is worth more than what we paid for, we're selling it. We're just playing middleman here. So that's how we make money as options traders. I still don't know how to get you guys back, but I'm working on it. Sorry. So that's how we make money as options traders. All right. So got to remember, like if you're a trader, investor, anything, right? The market pays for patience. A lot of people lose money in the first 15 to 30 minutes in the market because they're trying to predict the directions, right? And then here's one thing a lot of people don't know as traders. And at first, when the market opens, that first 15 minutes, 30 minutes in the market, the premiums are at their highest. Their premiums at their highest, so you're overpaying. So you're getting in at the highest peak of a premium. So even if a stock goes in your favor, but then the market like level sets, because after the first 15 to 30 minutes, the market actually starts to level sets the premiums based on the ask and the spreads and what people are paying for, and it kind of comes down and averages out and level sets. So even if it goes in your favor and like let's say it has a slight pullback and it level set the premiums, then it starts to go back in your favor, you could still be down because you pay too much for the premium. So you got to wait for that first dust to settle in the market, usually about that first 30 minutes, right? Unless, now some people who do the first soon as it opens is like they have like high frequency trading type machines because they're trying to get in and get a quick spike on the 1 minute or the 5 minute. We don't need to do all this. Too much anxiety for that. That's why I like the 1 hour. I like to take it slow and be able to breathe and see the action happening. So here's what I'll say. There's three things, right? You wait for confirmation, right? You wait for the movement and the price action to start happening, and then you wait for the structure to play out. And we talked about what the structure is, breaking out of those little levels that I set, or this is structural, right? Does this break out and become a bear flag? Does the, was it Apple? It was one that was a bull flag. SPY, I think. Was it SPY? Yeah. See, this is why we wait for confirmation. Remember we had that bull flag there? Look what happened. It broke out. This is why. Now, if I was saying I'm going to guess this and I'm just going to jump in when the market opens because it looks like it's going to be a bull flag, I would have got smoked. This is why we wait for confirmation, right? You can say, okay, this is what I see happening, but you got to wait for it to actually play out. All right? See, perfect example in live time for you guys. All right. So that was NVIDIA, and we did Apple. I mean, that's 4 stocks. That's a good amount to look for on a day. We don't want to overwhelm on a day, but let's go look at some of those memory chips. Bing, bang, bow, boom, bow. Look at this. These are still bleeding. You know why? China. All right. So this is why it's still bleeding. That news from China has a lot of these still bleeding, but we don't fret that, right? Because we can make money when the market goes up or when the market goes down. All right, here's a beautiful example. Here's another example. See this here? All right, got this happening, and we got this happening. Got another bear flag. Now, this is a bear flag forming on a stock that's getting beat up in the market, right? So more than likely, I'm going to expect this to continue to falling. So under 67. I'm actually going to put an alert on this so I don't miss this one in case it does do that. Crossing 67. All right. This will be where I will take puts on that. So I would set my alert so I don't forget that or miss that one. Because this one is, like I said, it's in a sector that's getting beat up, and it already crossed 67 miles. You see my alert ping? Bing! Crossing 67. That's my alert. So the sad thing is that I can't trade right now because it's pre-market, so I can't trade it. But this is what I'm looking for a put on that. All right, so that's quite a few. Let's get back into some talking about what the heck else to expect in this market. How much you lose? Text me your inbox. What? I'll give you confirmed signals. How much you lose? Text me inbox. I will recover your loss. Hey man, boy, you a scam. King of Gold, man. Get out here scamming, bro. King of Gold, man, scamming. He said he'll tell you what to trade, and if you lose, he's gonna give you your money back. Scammer. All right. So talking about the stocks I'm watching. Let's see here. Okay. Here's one thing that people don't understand about trading, right? The market doesn't pay you for being right. There's plenty of people that could be right, but execute wrong. Make sense? You could be right, but execute wrong. You could be right, but do something wrong. So think about. Let's say playing a sport. You could be playing basketball, and you can be like, you could be right that you have your man open on the wing for a 3, but it's the center, you know what I'm saying, who ain't never shot a 3 in his life. So you could be right, but you executed wrong because you passed the ball to the center instead of waiting for him to get down on a block and setting a pick for your shooting guard to get out there to the 3-point line. You know what I'm saying? So you executed wrong. We also get paid by managing risk. And what I mean by that is we manage our portfolios well, and that's what keeps you afloat. Too many times people go what we call full port, which is putting everything up. I got a feeling this is going to go crazy. It's like the gambling mentality. I got a feeling this is going to go crazy. I'm going to put all my portfolio into this stock, and boom, we're going to go to the moon. And it doesn't go to the moon, and your whole portfolio is gone. You gotta have proper risk management. You don't want to risk more than really per trade, maybe 2% of your portfolio in the trade. You know what I'm saying? I'm sorry, take that back. 10% of your portfolio in the trade, and then 2% of your portfolio on a loss. So what I mean is, if you have, let's say, $100 portfolio, the most you want to put up per trade is about $10. You know what I'm saying? And then out of that $10, you only want to lose about $1 or $2. That keeps you in the game. That allows you to keep trading, for quite some time. So that's the type of stuff that keeps you in the game. For me, I'm patient. Like I said, we just showed that on SPY. Like, I want to be patient to see what happens instead of thinking I'm right, just to be like, see, I told y'all. Because I could have jumped in this, well, not pre-market, but if the market opened and I thought for sure this was a bull flag just because this one was, I would have got clapped. You know what I'm saying? So you got to be patient and wait for that confirmation to happen first. I'd rather miss a trade because I waited on it and it didn't go to the upside, right? I'd rather miss a trade than force a trade and then lose money. You know what I'm saying? I have no problem with sitting on my hands. Like, I think even like all last week, the market was so choppy. I kept telling my group, like, look, all right, if you just want to trade, here's what you need to do today. Either you scalp very quickly and grab your money, you push it out weeks, to months, or you just sit on your hands. There's nothing wrong with sitting on your hands. People, you don't have to trade every day. People feel like, I got to trade every day to be active. No, the only thing that you have to do every day if you're not trading, you don't have freedom, is work. You know what I'm saying? That's what you have to do every day, is work. And maybe that's why people think about that with trading, like feeling like they have to trade every day, because the mentality is we're used to having to work every day. You know what I'm saying? But you don't have to trade every day. You can miss a trade, and miss $100 on a day because you didn't trade, but then wait for a perfect setup, and then that perfect setup gives you $400. Then it makes up for that day and the rest of the week. You know what I'm saying? So being patient is great, because we want A+ setups. We want the patient setups that's going to give us the big bang for our buck. You know what I'm saying? Trading every day in a choppy economy just to be trading, just to scalp out $50, which isn't bad. Don't get me wrong. I'm not saying $50 is bad, especially if you're getting it in 5 to 10 minutes. You know what I'm saying? There's not many. I think it was 10% of Americans are six figures. So that's $50 an hour. You know what I'm saying? So if you're getting, that's a millionaires. Like 18 to 20% of Americans are six figures or so. So you're talking about $50 an hour at a minimum. So if you're getting $50 in a trade and it took you 10 minutes, that's great. Don't get me wrong, that is great. I know social media likes to show you, and these influencers like to be like $1,000 days, $2,000 days, $5,000 days, and you start feeling like you need to be chasing that too. No, you don't. If you're making $20 an hour right now and you make $50 in a trade, you just made 2.5 hours of your day, of your work day. You know what I'm saying? Like, that's 2.5 hours less if you're stacking that bread up and compounding it, that you have to work on the back end of your life. And we talked about that, the retirement and the freedom gap. So don't scoff at $50, $60, $100 wins or $100 days and stuff. Don't scoff at that stuff. I promise you, because they add up quicker than you think. Compound adds up much quicker than you think. So don't look at that as a small win. Run your own race. Don't let people have you feeling like you're behind because they're making $5,000, $10,000 trades and crap like that. You know what I'm saying? So, because the good thing is green keeps you survivable, and great traders survive long enough to be consistent. You know what I'm saying? So we want to just be consistent. If you can make $100 a day over your trading career, you're better than 95% of traders, because most lose money over the long term. You know why? Because they get cocky. Like, if I was to get cocky, I would have been like, ain't no way, no doubt this is going to be a bull flag, and it would have smoked me. You know what I'm saying? I never get cocky. I stay humble, because the market will humble you in a heartbeat. The times over my years of trading, the times that I've said I know it all, I got this, were the times I got BTA from the market. You know what I'm saying? So yeah, I just stay humble with it. The biggest lesson today. So a lot of beginners think that every green candle is a buy. False. There's a lot of green candles that are fake outs. Case in point. This green candle right here, you would have thought was a buy. You know what I'm saying? Somebody would have jumped in this thinking this green candle is a buy. That's not what green, red means, right? They're entry signals, yes, but only if it's coming out of the proper setup, structure, and proper pattern. You know what I'm saying? Outside of that is just noise. And this right here would have been noise. You would have thought this was the green candle to get in and gonna, go crazy. And next candle, this red candle wouldn't even have given you time. If you didn't have a stop loss in place, this wouldn't even give you time to close this thing out. Look how fast this just fell out of the sky. So every green candle is not a buying signal, right? We want to look at it as, okay, it's a green candle. What's the structure? What's the pattern? What's the trend of the market? You know what I'm saying? That's how we look at it. Much of we look at the broader scope of everything before we jump into it. So anyway, like I said, if you learned something today, tap a follow, tell a friend. If you got any tickers, drop a ticker in here. Let's talk about it. Let's see what you got. Anybody in there other than the scammer? No, only the scam dude was in there dropping stuff. All right, so yeah, if you got anything, drop a ticker in there. I'm gonna stick around for a little bit longer. Let's see what else is happening today. I'm scrolling through my notes here so I can make sure I got everything going on here. No, this is about it. All right. The Fed rate decision is going to be super big today because, again, the way the interest rates work, right? The higher the rates, the more expensive it is to borrow money. You know what I'm saying? Nobody wants to borrow money when they have to pay interest on it. Well, I'll take that back. People do it all the time, but once you understand financial literacy and the way the world works and the way that money works, you would do it less often, right? Because it starts to make less sense to borrow money when you have to pay interest on that money, because that interest compounds. Just like we talked about the compounding interest for the investing, the compounding interest also, all that stuff compounds when it comes to borrowing money too. So we don't want to borrow money and have to pay more than what the money's worth. The dollar already loses enough of its value, and then you're just spreading the loss of the dollar value that much more when you're paying interest on it. Okay, we're really pulling down. I'm just paying attention to this in the pre-market. So we're really pulling down. I like this because I want it down here anyway. I want more of down here in this demand zone, get down to this little box and potentially bounce, or we lose this and pull down. So if we lose this and pull down, we'll just really wait for the Fed to talk, because if it's good news, then it'll pull up and give us a buying opportunity. It just gives us a buying opportunity. So again, it just goes back to being patient. It wouldn't even trip. Now, if the market was open, since this was our pre-market levels, what would I have done? Pre-market levels, right? What I say? If we broke above here, we'd take calls. If we break below here, we'd have taken puts. So if the market was open, we would have been in some puts right now, maybe some 740, 739 puts, and already in the money because of where we are right here. Putting this out till tomorrow, or what's tomorrow? Thursday till Friday. You know what I'm saying? We would have been in money at least 15, 20%, got a little bread and got out of there. So that's what I would have waited on anyway. Either way, would have made money. I was just thinking bullish because there looked like a bull flag forming. Got invalidated because we got rejection, right? So all we do is wait for the levels to break, and we got into it. So now we're down below this level here. So the way that you trade it now, since we're below this level already before the market opens, is we just wait for it to either reclaim this level, right? Reclaim this level to get in, to take it back up to at least this 743. So still a 2-point move, which is good. This is SPY. You don't need a big move in SPY. This is good. Wait for it to reclaim this level, right? Or wait for another candle to open below this level to show that we're continuing down, and then you get in down to 738, 737. That's how you will play that. Or if you're super cautious, you wait for it to reclaim this level and then wait for it to either come back up and reject again or break through. But there's so many ways that you can play this, but this is the most important levels here. All right. One thing I did forget about IWM. My bad. So look at IWM. We're pulling back here too. IWM's been in this channel here for a while. You see this? We've been in this channel for a while, and IWM just hitting, boom. See this? Coming up, boom. So let's go look to the daily yesterday on IWM. Forgot about this one. This is the Russell. Remember? This is the Russell. No Simmons. All right. Here. And then the high here. So really this box, I don't even need to draw this. So really this box, 290 to 293. We need to break out of this box here. So this level here. If we break out of this box, we're going out of there. So we're going out to the 1 hour pre-market. This is a pre-market. So we've already broken below pre-market, just like SPY right here. This zone right here is the pre-market, right up in there, right? We've broken out of it. Same way I would have played SPY. Broke below my pre-market area. Boom, I'm pulling down here. Now we just wait. We either wait for another candle to confirm that we're coming back down to this low of yesterday of 290, or we wait for it to reclaim this 293.84 to take it to some calls back up. But once we break out of this zone is where we really see the magic happen. So that's how we'll play IWM. It's pretty simple, real simple strategy, but it keeps you in the game and it keeps you profitable. All right. Hope you learned something again. Drop a follow. Drop a note if you have any questions on any stocks, tickers, or anything you want to learn. Let me know, and we'll be back towards the end of the market and see how everything played out, especially when the Fed starts talking. I might come on live and walk through the Fed conversation with you guys. All right, peace.